Good morning, everyone. Welcome to the Ashworth Wealth Weekly Market Update. My name is Todd McChesney. I'll be with you this morning, kind of sharing some things going on in the economic world that we want to share with you as clients and friends. I'll kind of go into the slide right now. As a general rule, this is a slide from the Conference Board Leading Economic Index. Excuse me. Basically, what they do is they look at the growth or the potential growth or the expected growth in the economy over the next little bit, and they kind of make some determinations based on how things are looking. In this scenario, you can kind of see going back to 1971, there have been 7 different instances where we've been through a recession, both short or long, depending upon the growth in the economy. I kind of refer to this as the Todd chart because I was born in 1970, but we can see that recessions do happen. We don't get too concerned about them, but we want to be aware of what's going on when these kinds of things do occur. Jokingly in the office, we always mention that economists have predicted 11 out of the last 4 recessions. Most economists are always very pessimistic as it relates to the market, and so want to understand that they don't generally say, hey, things are looking really, really good. They're always worried about what's happening. They're trying to hedge their bets, etc. So just be aware of that. Recessions are normal. We go through them on a regular basis. On average, we go through a recession probably every 5 or 6 to every 9 or 10 years. We'll go through recession. It's kind of held up for the last 50 or 60 years or so. Credit conditions continue to struggle from a banking standpoint. Interest rates being higher has really affected banks, just making sure they've got proper liquidity. So we'll still work through that. Banks aren't in trouble. It's just that it just takes time for those yields to mature as they've tried to match what their deposits are with their investments at the banking level. So we'll keep an eye on that as well. The good news from an economic standpoint is housing starts are still doing well. People are still buying houses, still building houses. But as many of you can probably guess, especially here in the Intermountain West, housing prices continue to be very, very expensive. It's very difficult for young people to get into housing. So there'll probably be some level of adjustment coming forward on that. But as a general rule, we aren't worried too much about any impending recession. I think the big thing is I'm going to take some notes from our newsletter this last week that you should have just received in the mail in the last few days. About how to deal with a recession. A lot of it depends on if you're still investing and you're not retired yet. This is a good time to review your liquidity. It's a good time to make sure that you're still on target. When we talk liquidity, we talk about how much money should we have in cash, how much money should we have in short-term bonds, just making sure that we're in proper positioning there so we don't make emotional decisions. 9 times out of 10, probably on average, when people really, really struggle with their portfolios, it's because they're making emotional decisions rather than decisions based on what's going on in the market or what's best for their long-term financial future. Don't panic. We don't panic. We don't get concerned about recessions. Obviously, they're not fun to go through. They usually last from anywhere between 6 months to 9 months on average. But for the most part, we've always thought, people don't buy farms because they think it's going to rain next year. They buy a farm because they think it's going to be a good 15 to 20-year investment. Now, if you are retired, a couple things you can deal with. You can try to live within your means. A lot of people go back to what did I do during COVID? We had a short-term recession during COVID. Didn't really count as a recession because we didn't have 2 full quarters of slow economic growth. But we had about a 2 or 3 month period where things were really, really sketchy from a growth standpoint. We didn't know what was going to happen. So find a way to live within your means if we hit the skids here on some type of a short-term recession. Continue to pay down debt, think long term, and then probably the biggest one is stay mentally healthy and physically healthy. Help us overcome some of the effects of emotional effects of recessions. Sometimes we just need to turn the news off. So we're not too concerned about it, but want to give you a heads up that it does look like economic growth may stall here for a little bit, but want to make sure we're on top of some things and give you some information as we see fit. So hope that makes some sense. If you have any questions, please feel free to reach out to our office. Feel free to forward this to any friends or family members that you think might benefit from this kind of information, and we'll look forward to seeing you next week. Thank you.